What's going on, y'all? Welcome to another episode of the Friday Wrap Up with yours truly, Kevin Weedmark, aka the Mortgage Mouth, and I hope you had a great week. And the Friday Wrap Up is where I bring to you, so we're all on the same page, whether we got open houses, taking clients out, that we just have a great understanding of what happened this week, so we can all be on the same page and we're beating to the same drum. Had a great day today. Got to have catch up with my favorite title person. Thank you, Allison, for your time today. Ran into a guy in the street today. Had to take a picture of him. He just had a big afro. As you can see, I'm bald. If I could grow one, I say it all the time. That was cool. Then I got to go listen to Charlie Crockett, our great Austin-based Texan. And got to hear him a little bit of South by Southwest, got an autograph, snuck a picture. You're not supposed to take one. Of course, I did anyway. So let's just dive in. Let's talk about what happened this past week. And the big thing is inflation still remains sticky. Even though we had CPI, we had PPI come out, they both came in slightly under forecast. They are still running hot. Let's make no mistake about it. Prices for both products and services is still on the high side. It's still something that the consumer is having to fight, having to adjust, and it's been 2 years that the Fed has been attacking it. So, it's still out there, but traders enjoyed the fact that it was a little bit under forecast and it didn't come in super hot like it did last month. The market sell-off continues, and the biggest winner is treasuries. Traders, once again, in markets to make money. They simply, when the Dow is selling off, the NASDAQ, the S&P, their flight to safety is their biggest concern. So what they're doing is they're sinking their money into treasuries, and the biggest winners are typically interest rates. So that's a good thing, right? How long that's going to continue? I think we probably have about another 6-month run of that volatility. So please make sure you take advantage of it. The consumer, Michigan consumer sentiment came out. The consumer continues to show signs of uncertainty, which overall is not good, which is why today we saw the 10-year Treasury close a little bit higher. That was the main data point today. The growing concern, once again, is we have just the consumer is a little bit on the ropes. Plus, we have all this tariff talk. It looks like continuing resolution is going to get passed, whether that's a good thing or bad thing. Just seemed like traders wanted to take a pause, and for the second week in a row from where we started the week, interest rates actually crept up. So that is the second time it's happened since the inauguration of this new administration. Labor data came in all this week. It continues to show stability. So a lot of the growing concern is, when is it going to show, when is the kink in the armor going to show all the government layoffs that have been happening? So that is something that traders are like, the data came in that good. We show some stability. That's a good thing. The Fed is going to get excited about that. They pointed it out last week, if you remember that from Powell. So that is something that was a good thing. But again, it's still in the back of everyone's mind. And tariffs remain the great unknown. It's a constant. We have a reciprocating tariff coming out. I think it's the beginning of next month. So in a few short weeks that President Trump has announced. So, it's a lot of this guessing of how the overall economy is going to behave. And a lot of dollars right now are on the fact that it's going to slow the economy down, which is why we're seeing sell-offs across the board, big sell-off days in the markets, and we're seeing the benefit of treasuries. I think we're going to see some stabilization here. We may even see rates creep up just a little bit. So the big takeaways, once again, when you see those low valleys, just make sure you take advantage of them. No one knows when the bottom's going to be. But if it makes sense for you and it saves you some money on a refinance, and I would very specifically make sure that you're talking to your mortgage professional about a no-cost refinance, because in the future, I believe rates will be lower. So that's really important. If you don't know what that is, please don't hesitate to give me a call. Happy to discuss what that is. And the other bit of advice I would have is use the bank's money. Talk to your mortgage professional about what is the base rate that could be provided, what is the potential of a buy down of that interest rate, what does that look like, what does that cost, and what if you were willing to take a slightly higher interest rate to pay for those closing costs at the closing table for your purchase. Once again, knowing that in the future, the belief is the rates will be lower. And I have that belief. Sorry, I had my little cheat sheet here. Because if you listen to the current administration with energy independence, government getting leaner, cutting out fraud, all those type of things, overall, those are good things. Believing that the manufacturing sector is going to pick up from a labor side, that the U.S. economy overall from the underbelly is going to get healthier from the private sector. So that's my 2 cents. I hope you all have a great week. You have any questions over the weekend, you're talking to a client, you need a pre-approval flight, whatever it is, I'm always working. Give me a shout. Would love to help you. Otherwise, have a great weekend. It is hot in Austin, Texas. We're already in summer. I think it was like 94 today. Sun just blazing. All these people in town for South by Southwest that are wearing jeans and pants. I just, I don't get it, but they're all out there. I couldn't do it, man. I got to be in shorts. It's hot. All right, y'all. Have a great weekend, and I'll be talking to you on Monday with my Weeds Weekly. Cheers.